Welcome back to Author's Note. As Christine Lagarde reminded us this week, we're living in a three-speed global economy. And what that means is that the divergence in economic growth is happening between different advanced economies as well as between the developed world and the developing world. One perfect example of that divergence is the US and the UK. Normally they move pretty much in line, but since the financial crisis we've seen, the US has continued to grow, albeit more slowly than usual. Their output is now sort of 3% above the pre-crisis peak. In the UK, we've stagnated, so we're 3% below the peak. Why has this happened, and can the UK ever catch back up again? To discuss this with me is Vicky Redwood. Thank you for joining us. She's from Capital Economics. Vicky, what do you think's going on here? Why do you think the US and the UK are diverging, and how significant is that divergence really?
Well, there have certainly been times in the past when the UK and US economies have moved in different directions for a period. But I think it's particularly surprising that we're seeing that now, given that both economies had a similar set of problems to deal with over the past few years. They had big financial sectors that were hit by the credit crunch, overvalued housing market, indebted households. And they also reacted in a fairly similar way to the crisis in terms of doing lots of quantitative easing. So I think that's why it's a bit of a puzzle now.
So we can see there have obviously been periods of divergence in the past, but this really is quite stark, as you say, given that we went in looking really quite similarly troubled.
Well, I think I'd put the blame on three factors. First, the fact that the UK has had much higher inflation rates over the past few years, which has eaten into households' real pay.
And that's partly, I suppose, because we've had a massive 25% depreciation of sterling, so that's made imports much more expensive.
Yes, obviously both the US and UK have had to deal with higher energy costs, but the UK had that depreciation of sterling, and of course the VAT rises here I think haven't helped. So the second factor I think that's been important is the austerity drive in the UK. Both the UK and the US have pretty bad fiscal situations, but of course the UK has got on with sorting out its problems.
Or trying to,
or at least getting a plan in progress.
Yeah.
And then the third factor I think is that the US just managed to deal with the legacy of the credit crunch more quickly and work through the problems that were still lingering after that credit crisis.
Okay, so let's look at your second chart, and I think that sort of speaks to that issue.
Well, I think this is interesting because it shows that bank lending growth, which is obviously one of the key constraints on the recovery in the UK. In the UK, bank lending is still essentially stagnating. But in the US, you can see after actually bank lending did worse during the recession, it's been picking up quite nicely. And you've recently had bank lending growth in the US of about 5% or so. And I think that is one of the key factors that's been helping their recovery.
Right, because that helps kind of business investment start to grow again and put some more dynamism back into the economy. Whereas here, I suppose, we've just had huge sort of stagnation of productivity as well as growth.
Exactly, so it's helped businesses and it's helped households and the housing market too.
And I think that's what your third chart shows actually. Let's have a look at that one. So here we've got nominal household debt, and it's clear that the US households have done a much better job here of trying to sort of deleverage after, we both started from a pretty kind of over-leveraged position, didn't we? And what's the relationship between this and the house prices?
So I think you're right, the US households have managed to work through their debt problems a bit more quickly, and I think that's partly perhaps because some of the debt was just wiped out, so defaults in the US have been higher. But also I think in the UK, the fact that we've had this squeezed income growth means that households just haven't had the money left over to try and bring down their debt levels. And so I think now that's having implications for both the housing markets and household spending. In the US, households are now in a perhaps more stable position, are able to start spending again and borrowing more, whereas in the UK, I think households are still burdened by these high debt levels.
Okay. Now these sort of differences and certainly the problems that we know about in the UK, they seem quite sort of intractable here. Do you think that we have any chance of catching back up to the US, or are these sort of quite structural things now that mean that we're going to lag behind for really quite a long time?
Well, I don't think these problems are going away soon, so I think for the next year or two, the UK will continue to lag behind the US. Certainly this year, for example, we expect growth in the UK of just 0.2% or so, whereas in the US more like 1.5–2%. But I think further ahead we can be a bit more optimistic. I think the problems in the UK don't mean that we've permanently lost some of our output. I think we can regain it further ahead. And so once demand does come back, the UK has got scope for a period of pretty rapid catch-up growth, whereas the US has now exhausted more of the gains that can be had from recouping the losses during the recession.
Okay, nice to hear some optimism for once. Thank you very much for coming in, Vicky. So the UK still lagging very much behind the US. Vicky's optimistic that we can catch up at some point. Following the US's very bad payroll numbers last week, let's hope that's because the UK grows faster and not because the US starts to slow down.